45 minutes of conversation was all it took for Masayoshi-san to commit billions to a man he barely knew. In 2017, the legendary SoftBank founder met Adam Neumann, the charismatic leader of WeWork. Within that single hour, Sun drew a diagram on an iPad, effectively launching one of the most reckless financial experiments in modern venture capital history. The Vision Fund, backed by the immense sovereign wealth of Saudi Arabia and Abu Dhabi, was designed to change the world by pouring unprecedented amounts of cash into startups. It was supposed to be the ultimate kingmaker. Instead, it became a cautionary tale of hubris, ego, and the death of traditional business fundamentals. WeWork wasn't selling office space. They were selling a lifestyle, a tech-adjacent dream wrapped in reclaimed wood and free beer. Neumann told investors he was building a physical social network. He claimed his company was a technology firm, not a real estate landlord. This distinction was critical. It allowed the company to be valued at an astronomical $47 billion, despite bleeding cash at an alarming rate. Behind the scenes, the company was a carousel of unchecked spending. They bought private jets, hosted multi-day summer camps for employees that felt like festivals, and expanded into absurd ventures like a private school. Neumann, with his barefoot walkabouts and messianic rhetoric, convinced the world that the rules of gravity and profit simply didn't apply to him. Then came the IPO attempt in 2019. For the first time, WeWork had to show its actual books to the public market. Investors didn't see a tech unicorn, they saw a massive real estate liability with no path to profitability. The valuation plummeted faster than a lead weight. The IPO was cancelled, the company faced a liquidity crisis, and Adam Neumann was ousted, walking away with a golden parachute that still haunts the industry. But here is the detail that the headlines missed: SoftBank didn't just invest, they doubled down when everyone else was heading for the exit. Even as the company's valuation cratered, Masayoshi-san poured more liquidity into the burning wreckage to keep the lights on, hoping to save his reputation and his massive initial stake. It was a classic sunk cost fallacy executed on a global stage. The total loss on the investment for SoftBank would eventually balloon to $13 billion. It is easy to blame Neumann for the toxicity, but the structural rot came from the top of the Vision Fund. When you have a blank check, you stop looking for efficiency. You start looking for speed. By demanding that every portfolio company grow at an impossible velocity, the Vision Fund essentially forced startups to burn money simply to meet arbitrary expansion targets. The carnage wasn't restricted to WeWork, it was a symptom of a systemic belief that capital alone can solve any market problem. We are looking at the wreckage of the era where profitability became a dirty word in Silicon Valley. Investors were so fearful of missing the next Google or Amazon that they became blind to the basic math of unit economics. If a business loses money on every customer it gains, having a billion customers doesn't make you successful, it makes you a catastrophe waiting to happen. The story of WeWork isn't just about a failed office-sharing company. It is a post-mortem of an era where common sense was traded for the illusion of innovation. When the dust finally settled, the office floors remained empty, the private jets were grounded, and thousands of employees were left with worthless stock options. The scale of this collapse is staggering. We aren't talking about a small startup failing in a garage. We are talking about a major geopolitical player in the global economy losing billions because one man thought he could buy the future. History rarely repeats itself exactly, but it rhymes with a terrifying precision. Every time a new wave of disruptive tech arrives, we see the same promise, that we have entered a new paradigm where traditional finance is obsolete. We heard it in 2000, we heard it in 2019, and we are hearing it today in the age of AI. The irony is that the more money you throw at a problem, the less likely you are to see the cracks forming in the foundation. If you found the mechanics of this financial disaster insightful, you absolutely have to watch our deep dive into the collapse of the FTX crypto empire, which follows a startlingly similar path of greed and unchecked ambition. It's linked right here on the end screen. But be honest, if you had the ability to move global markets with a single check, would you have the discipline to say no, or would you be tempted to chase the same mirage that cost SoftBank its reputation?